Well, the weakness continuing in the corn market today as we get closer to the end of our trading week. Let's take a look, and we'll begin at the corn market here with our quotes provided by Bar Chart. Well, we still have double-digit losses here across the board. September down 12 1/4, December down 12 1/2 cents at 5.11 1/4, and that is still, though, about 4 cents from its low of the day. Not quite on the low. We have the soybean trade now firming up a little bit again. August soybeans now 6 3/4 higher at 13.72. Last time we looked, we had November soybeans a little lower. Now they're back higher by 2 cents. We're at 13.21 1/2 per bushel. Now on the wheat in Chicago, that September contract is currently trading 5 3/4 lower. The weakness continuing here. We're at 6.12 1/4 per bushel. Kansas City market early on had strength versus the other two exchanges. It is down a penny at 5.87, but it is trading a little stronger than Chicago. And spring wheat, Minneapolis September wheat down 3 1/4 at 8.01 3/4. And we're joined by Chris Swift of Swift Trading in Nashville, and he has us on the phone here today. Chris, good to visit with you here. The market seems to be kind of, I guess, heading for the corner, if you will, ahead of the WASDE report coming up on Monday, but there just seems to be a lot of trepidation about what the weather outlooks may do over the weekend as well.
Well, and there is, and I overheard Tim say that we've got a little moisture right now with the big buildup coming next week. And remember, we're fixing to go into pollination. So how that weather impacts the pollination is probably the last step of this before we get into harvest. So it's going to be very crucial to see what kind of temperatures we have through that time frame.
What do you think the odds are that, I mean, we can't forget that next Monday, not only will we get the WASDE report, the USDA will also have their weekly crop progress report and their condition report. What do you think the odds are that they will raise the ratings for the corn and soybeans next week? Because analysts thought they would the last 2 weeks, and it hasn't happened yet.
Yeah, I'm not real sure. I don't see any kind of great increased performance in the crop, so I doubt very seriously that I'd see much of an increase in the ratings. What we're looking at is a couple of developments that have come about this week. China has said that they're going to increase their liquidity to their banks, so they're back into the increasing their liquidity. That should help to spur some more buying from them.
Now, on the wheat side, do you think that we're getting over the hump, if you will, on the harvest pressure in the wheat trade?
I think so. The wheat, as far as the harvest for the winter wheat, it's gone along excellent. They've had great weather to it. The yields have been really good. The Minneapolis spring wheat, from what I understand, there is just not hardly any of that left. So the market here at $8 a bushel is probably sitting trying to figure out, is it really worth $9 a bushel, $7 a bushel? But as you go forward, it's not this time frame. It's July of 22 where any kind of big deficits will begin to show up.
Interesting stuff. And we did leave a big gap on the charts, I believe, after the long holiday weekend. And even though it has bounced at times this week, it still has not filled that. So we have to keep an eye on that as well. All right, we'll come back here in a moment. Chris, we'll take a look at the latest in our cattle and hog trade right after this. We're back with Chris Swift of Swift Trading in Nashville. Pretty good export numbers this morning as far as the weekly summary from USDA, didn't you think, Chris?
It was pretty good. The pork was a little bit disappointing, but I think between the beef and the pork, it's still nothing terrible.
All right, so 23,800 tons on the beef and 43,800 tons on the pork. And China did return as a big buyer on the pork side this week, so it was good to see them back in the mix. They did buy 2,700 tons of beef. I'll mention that as well. Well, let's look at our futures and tell me what that means, what we're looking at here, Chris. On the live cattle trade, we're turning mixed and narrowly mixed at that. August is 30 cents lower at 118.97, October down 22, and December is a nickel higher at 130.32 per hundredweight, and that one's already at a premium to the nearby contract, so kind of widening out that spread a little bit there. Meanwhile, on the feeder cattle side, everything is higher, but not by very much. August is 15 cents higher at 157.47. The leading contract, I guess, would be November. It's up 40 cents right now, and that's about the extent of the gains there. Now, on the lean hog trade, everything has turned higher there today. August up 65 cents at 101.02, but kind of a narrow trading range for the hogs. I mean, they haven't had a narrow range like this for quite a while. It is $1.30 wide, but considering what we have been witnessing the last couple of weeks, they seem to be kind of tame today. How come?
Well, I think the export numbers were good, and we dropped right close to $20 in the futures last several weeks. So we're hesitating right now. I got a little pause in the market. The export news is pretty good, but we're still seeing the index drop lower. The futures have the discount to them, so probably just more converging of basis than anything.
Have you heard anything on the cash markets today? If we look at our livestock summary from yesterday, we did have some cash cattle sales out there in the plains. They're still hovering between 118 and 120. They just don't seem to really get anywhere. In fact, they may be softening up a little bit. The dress sales were 196 to 200, and before we had a top of 202 or 203. But they're kind of in there in that ballpark of where we have been. Meanwhile, the cash hog market on a live basis, we're about $1 higher, and the carcass basis hogs, we're down $1. Don't know how that works, but are they giving you any signals as to what the futures may do?
I don't really think so. I think we look at from the perspective of the consumer, and the consumer for the first half of the year has really enjoyed the post-COVID surge. The spending has increased, and that has really caused inflation to jump dramatically. Now I think the second half of the year you'll see consumers begin to pull back in that discretionary spending, and one of the easiest things to pull back on is meat consumption, either by buying lesser, cheaper cuts of meat or just different types of proteins out there that are available.
Well, if you look at the Dow Jones Industrial Average today on the equity markets, they're flying high. September 422 higher now at 34,716. So we'll have to keep an eye on that too. Good to talk with you, Chris. Have a good weekend. And that's Chris Swift of Swift Trading in Nashville. John?